Fitch cuts India growth forecast to 10%, says rapid vaccination to support revival. Hello and welcome to Inventiva. This is Sonia Ghatraj back again with the big news. Fitch rating on July 7th cut India's growth forecast to 10% for the current fiscal from 12%, estimated earlier due to the slow recovery post second wave of COVID-19, and said rapid vaccination can support a sustainable revival in business and consumer confidence. In a report, the global rating agency said the challenges for banking sectors posed by the coronavirus pandemic has increased due to the virulent second wave in the first quarter of the financial year ending March 2022, FY22. Fitch rating revised down India's real GDP for FY22 by 280 BP to 10%, underlining our beliefs that renewed have slowed recovery efforts and left bank with moderately worse outlook for businesses and revenue generation in FY22, it said. Fitch believes that rapid vaccination could support a sustainable revival in business and consumer confidence. However, without it, economic recovery would remain vulnerable to further waves and lockdowns. It said localized lockdown during the second wave kept economic activity from steady to levels familiar to those during 2020. But disruption in several key business centers has slowed the recovery and detained Fitch's expectations of a rebound to pre-pandemic levels by FY22. India's economy contracted 24.4% in the June quarter of 2020. Fitch views India's rebounded potential to be better than the most comparable BBB peers because it does not expect a structural weaker real GDP growth outlook. However, there is a risk that India's medium-term growth could suffer if the businesses and consumer activity were to experience scaring from the COVID-19 pandemic. The agency estimates India's medium-term growth potential at about 6.5%, stating the vaccination is the key for the business revivals and the relief measures would only provide interim support. Fitch said the low vaccination rate makes India vulnerable to further waves of the pandemic. GDP growth in current fiscal was estimated to be in double digit initially, but a severe second wave of the pandemic has led to various agencies cut down projections. RBI too earlier this month cut India's growth forecast to 9.5% for this fiscal from 10.5% estimated earlier, while S&P Global Ratings lowered its growth estimate to 9.5%. Another US-based rating agency, Moody's, has projected a 9.3% growth in March 2020. For 2021 calendar year, Moody's has cut growth estimate sharply to 9.6%. Last month, World Bank slashed its GDP growth forecast for current fiscal ending March 2022 to 8.3% from 10.1%, estimated in April, saying economic recovery is being hampered by the devastating second wave of the coronavirus infections. Domestic rating agencies ICRA2 had projected economic growth to 8.5% for this financial year, while British brokerage firm Bracals had last month cut India's growth forecast to 9.2%. Fitch, in its report on Indian Bank, further said that the regulatory relief measures have postponed underlying asset quality issue for now, but bank's medium-term performances will be detained without a meaningful recovery economic. The operating environment remains challenging for the banks with limited opportunities for business and revenue growth. Problems could escalate in the event that successively COVID-19 waves and the lockdown prevent a meaningful economic recovery, considering that India's full vaccination rate is still quite low, it said. Fitch experts bank exposure to stressed MSME and retail browsers to rise further, while the increasing relief outlay and is likely to compel banks, especially state-owned ones, to slow regular lending in the absence of the adequate crore capital cushions or weak contingency buffers.